So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. The Bitcoin usually leads in spring and summer,
which is now.
And then Bitcoin dominance falls and alt seasons start in crypto, liquid market, the hedge funds, let's call them those. They manage $8 billion. In traditional markets, it's $4 trillion.
Oh, wow.
What if I told you that crypto is about to change everything, and the potential wealth explosion could dwarf anything we've ever seen? Raoul Pal breaks down the shocking truth about the crypto industry's future, revealing how it's growing twice as fast as the internet. Stick around to find out why we're only scratching the surface of what's coming in the next few years.
This is a technology that is the new layer to the internet. It's not just about tokens. What's unique about this technology is there's token incentivization built in, which is why these networks bootstrap so fast. It's currently $3 trillion as an industry. If I extrapolate out the rate of growth, the trend rate of adoption is twice the speed of the internet. As the internet slowed down in adoption rates because it gets more saturated, if we extrapolate the same, we get to about 4 billion users by 2030. So I think the asset class goes to $100 billion, and we're only 3% of the way there. So this is the largest, fastest accumulation of wealth in all human history that lies ahead of us. It's the big rebalancing, how everybody can get involved, whichever country you're in, however much you earn, right? So it's the big one, the biggest macro trade of all time. That's primarily my interest in the trade. The whole space is driven by network adoption. More people will join the network, the more applications that get built, the more valuable these networks become. Beyond that, it's then broken down to different company or projects selling block space. That's all they do, which is a data storage. And essentially that block or distributed ledger, and they've all got a different sales approach. Bitcoin has, we're the most trusted, we're secure. Ethereum is like, we're the broad big one. Solana's like, we're the fast retail. So everyone is selling block space. But again, we're all incentivized to get passionate behind these things because of the tokens. This whole thing is being driven by a big macro trend. The big macro trend is the debasement of currency. So as liquidity gets pushed into the markets every 4 years when the governments go and roll their debt, this is driven by everything I call the everything code, some work that I did showing that every 4 years governments need to refinance their debts, and what they do is inject massive liquidity to be able to do it and try and get interest rates lower. So as we do that, it creates a perfect 4-year cycle, and it's not going to go away until we get rid of the debt equations and everything else. So where are we in the 4-year cycle? I break them down by seasons, each year being a different season. Okay, winter being when liquidity is being taken away, 2022. 2023, spring. Okay, markets stop going down. People don't quite believe it yet, but you see green shoots coming, but it still feels a bit wintry and cold and miserable. Then summer, which is what we're finishing now. Macro summer is year 3, same year as the election cycle. And then we go into macro fall or autumn. And that's usually the most explosive. So summer starts to rip, and then we hit what I've called the banana zone, which is when everything lasts until November, and we have different structures of these cycle. We had the last one, which it usually has a peak around tax season. So March, people have to sell some tokens to pay taxes. It falls for a bit and then it rips at the end of the year. Last time it fell 50% over that period in 2021, and then it ripped, but it didn't really extend, and everyone kind of got caught out by it was double top. 2017 and 13, well, they were different. They had the same cycle structure. It went to the summer, 2017, Bitcoin 10x'd from there in 4 months.
It's the same.
And that's the blow-off cycle. So we don't know what we're going to get, a stunted cycle or a blow-off cycle, but thinking about the political change and what's been going on, the probability has to be towards a blowout cycle. I don't see how that happens unless they break this everything code cycle of liquidity. So let's play this through. Let's say we're towards the end of 2025. The US economy and the global economy's picked up. What happens is inflation usually picks up a bit and the central banks start raising rates or tightening liquidity in some form. And that slows down 2026. Doesn't mean we get a recession, but we get a slowdown. So unless we change that dynamic, there's no reason to believe the 4-year cycle won't keep repeating. It'll stop being repeated once we break the root cause of the problem, which is demographics. Bitcoin usually leads in spring and summer,
which is now.
And then Bitcoin dominance falls and alt season start. So that Bitcoin dominance part of the cycle, that starts dropping from here, and then we start having the alt season. But nothing structurally looks different. In fact, it's very similar when you map the charts, very similar to the 2016-17 cycle and not dissimilar to the last one. In terms of the long-term trend of adoption, 0. In terms of speed, A lot.
A lot.
A lot. I mean, every single senior person in that administration is talking crypto all day. They're meeting crypto people all day. I mean, we've got Cynthia Loomis. Like, I can't wait for next year. I'm so excited. I'm like, they've all turned to DJ.
Exactly.
But the knock-on effect is more than just the US, because it gives a green light to everybody
else except
like Australia have been dragging their heels. India's dragged its heels. A bunch of places dragged their heel. But as soon as the US goes, we're all in. However late you come to this thing, you still realize this is the biggest macro opportunity of all time. It's a way of making money. If you think about it, Bitcoin has done 150% annualized return since 2012, including 3 70% plus drawdowns. 150%. Once you realize that, if you start with some capital, what is the point of even starting a business?
Exactly.
I mean, like all of my friends, they'll all be speaking here, Dan Moorhead, Dan Tapiera, all of these guys. We're all macro guys. We all grew up together in the industry. We've all left. Sure, we use macro frameworks to understand this, but we're not just trade oil or currencies or whatever anymore. It's irrelevant. This is the biggest trade we've ever been given.
Raoul Pal dives deep into the extraordinary growth of the crypto industry, which has now reached $3 trillion. He explains how this technology isn't just about tokens, it's about creating networks that bootstrap and grow at lightning speed. With token incentivization built into the system, it's no surprise that we're on track to hit 4 billion users by 2030. That's a massive leap from where we are today, just 3% of the way there. Pal also discusses the importance of the 4-year economic cycle that shapes crypto markets, explaining how each cycle, starting with liquidity injections, shapes growth and adoption. As we move into the next phase, Pal believes we are about to witness the largest wealth accumulation in history. You'll want to stay tuned because the second half of this video is packed with even more incredible insights.
The VCs get them early, or the early stage investors, like yourself. You get some liquidity and you want to take some profits in some of it. Fine, people like VCs dumping. I mean, look, everyone's incentivized to try and make money. VCs take early risk. I get it. Why people hate it is because the secondary market is too small, right? So you think of the entire professional capital in crypto, liquid market, the hedge funds, let's call them those, they manage $8 billion. In traditional markets, it's $4 trillion.
Oh, wow.
So what we've got is a mismatch of liquidity. So these guys are now getting supernormal opportunities because the VCs sell, the tokens dump 60, 70%.
80, 90%.
On the unlocks. If they're good projects, that's the hedge fund's job to go and say, I like that one, I hate that one, pick them up, and then you can actually do it again. Now, retail hasn't figured this out yet because they want to buy it on the news announcement. Hey, Monad's just been launched. I buy and then it dumps. What they should do is wait for the dumps and then say, okay, where's the ruby in the dust here? What can I get? Because then you can make huge money. One of the reasons you're not seeing those super high valuations yet is because liquidity has not been massive, right? The more liquidity, people earn more money, funds make more money, businesses make more money gets recycled up the risk curve, and people start taking bigger risks. So I think it's still to come, but the VC market's had no exits outside of token. There's been no equity exits in any project. We need Circle to go public or get bought. We need some of the, Kraken, we need some of these bigger things to recycle the VC money to then ratchet the whole space up again. And then, as you say, if we've captured a certain amount of liquidity, yes, it's increasing, but then you've sucked a whole bunch into the casino of meme coins, it takes some of that away. Because this entire industry trades on attention, and there's only so many of us in the industry. So let's say there's 1 million active people in the industry. Well, that's 1 million people's attention, and you've got 10,000 tokens launching a day. How much attention can we give to anything? So it really is this game of attention, and memes have got it now because everyone believes that they can make the next 100x. And so utility stuff, layer 2, nobody cares.
It's sad.
It will come back because we'll have different investors coming into the space and looking for real value. It's just, I think, the nature of where we are. I think the next stage is a lot of the application stuff, the real world assets, the deep in, getting utility, gaming, it's all to come. Some things have been trading for all-time highs in equities.
Oh, really?
Yeah. I mean, there's several pieces traded at over a few million. So yeah, it's happening. I don't know where the Beatles are yet. Punks are obviously still lower, but they doubled in the last week. They're up 100% in a week. I like to be an observer of the first cycle and an aggressive participant in the second cycle.
Okay.
So memes, yes, we've had Doge and everything else, but this iteration of memes is something I've been talking about for a long time, which is, these are social tokens. These are community tokens, and this is experimentation happening in real time at massive speed. So yes, I've participate, I own some memes, stuff like that. But really, what I want to see is the same thesis we had before. I want to see the down 90, and I want to see what comes out the other side. Like we're seeing it from PFPs. I think my guess is punks will trade at new all-time record highs.
Oh, really?
We're seeing it with the digital art stuff. We saw it with Solana. We saw it with ETH the cycle before that. You know, it's the ones that survive, that have the Lindy effect out of these memes, and then who builds what with this technology and this idea that excites me. In dollar terms, they'll have massively outperformed because they will go from, I don't know, they bottomed at let's say 25 ETH, and ETH was at 2,500. Let's say ETH goes to 10,000 and these things go up to 100. The multiplier is gigantic. That's why so many people make money out of NFTs the last cycle, because you get the double multiplier.
Yeah, like a call option on ETH.
And that's just the start. And the disruption of this is total and absolute, right? Because human knowledge, which was scarce, becomes infinite. And everything digitized goes to zero in value, everything. And that's what blockchain technology did. Block technology creates a digital scarcity. Because if not, you can create endless pieces of digital art, let's say, but now you can't because you've got scarcity. But AI is going to create infinite knowledge. So infinite knowledge means zero value for a law and accounts and whatever over time. And then when you can create robots, you can infinitely create as many robots as possible. So, okay, what does that role leave for humans? Forget about the universal basic income, blah, blah, blah. I kind of believe in the Yatsui's model, which is that we can earn universal basic equity from participating in social communities and earning tokens, which is the kind of the big idea here.
Raoul Pal's analysis paints a bold future for crypto, one where the technology's rapid growth and the macroeconomic forces at play promise massive shifts. If you want to be ahead of the curve and understand where this industry is heading, you've got to follow these trends closely. Don't forget to like, share, and subscribe for more exclusive insights from leading industry experts like Raoul. The next crypto boom is already starting. Don't miss out.